Welcome to the Build, Grow, Exit Show. I'm Malcolm Louie, and today's guest we have Sal Acosta, the business broker and managing partner at Landon and Acosta. Welcome to the show, Sal.
Thank you, Malcolm. Pleasure to be here with you and everyone watching.
To get things rolling, can you talk a little bit about what you do and what your company does?
Sure. So at Landon and Acosta, just like you said, we are business brokers. We help people buy or sell a business, and we work in what's called Main Street businesses or lower middle market, which tend to be the relatively smaller types of companies out there.
All right. In terms of Main Street and lower middle market, where do you draw the line?
Well, there's not a specific line, and that's subject to discussion. But in my book, it's any business that on the low side may have as few as 10 employees, maybe on the high side, a maximum of 250. From a revenue perspective, anywhere from just about zero all the way up to maybe 10 or $20 million for the year. And things are still a little bit crazy here with the coronavirus as we're recording, but hopefully break even to about $1 million or $2 million in net positive cash flow. But again, those are just more guidelines than hard rules.
Right. So what's the smallest business you ever helped someone sell?
Well, the smallest business was break even, and actually the selling price was $20,000. So that was pretty small.
Okay. And what was the biggest business you've ever sold?
Biggest business, I would say, sold for about $5 million. And funny enough, it was a service-oriented business that just had tremendous cash flow, didn't have a lot of tangible assets, but buyers understood the benefit of the cash flow.
Right. How much revenue was that?
Oh gosh, that was about 5 million in revenue and about $1.5 million in net cash flow. Again, because it was service oriented, so it was very the profit margin was very good.
Right. So 5 million revenue, $1 million cash flow. And you said that deal sold for 5 million roughly.
Yeah, it was about $1.5 million cash flow, but yes.
Okay. So, without getting too into the weeds, I'm guessing that the buyer is willing to pay a 5 times multiple because the cash flow must have been really steady, probably had a strong recurring element to it.
Yes, that, and of course, it had a nice growth pattern historically. Plus, one of the things that we did for the buyer is we listed all the growth opportunities going forward, which fair enough, he would have been responsible for executing that. But we gave him a very clear roadmap of how he could take this and make it even better into the future. And this was a strategic buyer, so he was in the industry, so he understood the potential and understood that the plan that we were providing to grow this even further into the future was realistic and achievable for him.
Right. So in the work we do for our clients, we focus on helping improve businesses across 8 different drivers that buyers look at when they assess a company. So are you talking about those sort of plans where you're looking at these 8 different drivers, things like building teams, increasing recurring revenue, monopoly position? Are those the sort of plans they're talking about? Or do you have something else in mind when you're talking about the plans for the future growth?
Well, certainly all of those things, but also taking the business model that was local in one particular city and kind of doing I don't want to say cookie cutter, but using that same model in different other cities and identifying certainly what cities would be most receptive and have the most opportunity for that model to come in based on the players that were already there and the size and the demographics of the city and what type of competition you could expect to be there or was already there. And again, just as an example.
Right. So when you sell a business on behalf of a seller, is providing a future plan part of your package that you present to potential buyers?
Yes, although normally not in the level of detail that we did in this case. Um, I am always a big believer that you have to show the potential buyer, regardless of the size of the business that they're buying, because this applies also to, again, some of the smaller type businesses. This was a relatively big deal. I always like to show growth opportunity because, it helps, you know, uh, get you to the valuation that can be attractive to both seller and buyer. Usually buyers are wanting to buy the business to grow it. So you give them that sort of viewpoint. And again, not as detailed as we did in this case, because we did almost like an entire business plan for growth. But certainly we point out the opportunities.
All right. Sal, what do you think are the three most important things a business owner needs to think about when selling a business?
Well, the first one is to start early, because the earlier you can start, the more degrees of freedom you can have. If you somehow need to work with the business to make it better, to change it, to do whatever, that is definitely number one priority. Number two is to put your team together, because selling a business is a team sport. So you want to identify the business broker that's going to help you, lawyers, CPAs, maybe a financial planner if it's a retirement situation. So that's very important. And maybe number three, I would say, start thinking and executing on how you're going to make this business be as valuable as possible without you. A lot of business owners play critical roles within their business, as they should, and as they've done historically. But they have to understand that when the ownership transition goes away, they're going to go away, whether it's fast or slow. So start laying the groundwork for the current owner to be able to go away without taking on any of that value with him, and leaving as much value behind for the buyer.
Right. Now, these topics you talk about, it sounds like there are things that they need to work on years in advance of actually beginning the process of selling and bringing you into the picture. Or do you actually work with business owners on a multi-year basis to do these three things?
Well, I will start talking as early as they want to start talking. In an ideal scenario, they should start talking with me about selling their business 5 years down the road. And I know that sounds like a long time. But again, if there's gaps in any of these areas or the areas, it gives us plenty of time to fix it, so that later down the road, their business can be as valuable as possible, as easy to sell as possible. And again, when you're talking about, as an example, a business owner that's playing a very critical role and having himself extricate from that, so that, again, he can retire or go away, and everything continues to run seamlessly. That's a multi-year process. Also, as another quick example, some businesses are over-reliant on a particular customer or a particular supplier. And you want to make sure that that's not an issue, and you're diversified in terms of your customers, you're diversified in terms of your suppliers. Depending on the situation, that may also be a multi-year process.
Right. So for the business owners that reach out to you to engage your services, what percentage of them are the ones who are talking about getting their business ready to sell 5 years from now, as opposed to the ones who say, Sal, I'm ready to sell my business. Can you help me now?
Unfortunately, Malcolm, the second situation is much more prevalent than the first. And that's actually one of the things that I'm hoping video chats like this will help get the word out. Because I will tell you, over 90% of the time, it's, I'm ready to sell. I want to sell now. Let's get it done. it's relatively rare where they come to me and they say, "Hey, Sal, I want to sell a couple years down the road. I want to start the conversation. Let's evaluate the business, and you tell me what I need to do to be as ready as possible." Again, unfortunately, that is relatively rare. But again, I'm hoping that this type of conversation will help get the word out there that you need to start early, and that there's people like me and you that are willing to start having those early conversations. I don't mind talking to somebody, understanding that it's going to be several years before we're really ready to start the actual sales process, and before that, it'll be getting ready to do that.
Right. So in terms of business owners getting ready and doing all these things, why do you think, what are they thinking that's keeping them from taking action today? Right. In my mind, it's like, well, they're really busy running their business and trying to make it grow, and exiting in 5 years is something, yeah, something they're interested in doing. But just the idea of allocating more time to prepare the business to sell just doesn't seem as important as the other things they have on their plate right now. Would you agree with that?
I agree, and I would tell you it's also, maybe I'll add 2 points. One is, you don't know what you don't know. So you may think that you have a business that is easy to sell, that's very valuable, that's going to be quick to sell, that it's no problem, no brainer. And then, if you engage with somebody like me or you, we say, well, what about this? What about that? How, this could be a problem. This could be a weakness. This is a gap. This is, we can bring to the table some expertise about things they may have not thought about, that, could become issues when you have an actual buyer sitting at the table. The other one is, a lot of times the reason people want to sell their business is for retirement, and that's a very significant life change. And even if you're not a business owner, you're just an employee, or whatever the case may be, it's a very, very important life change that sometimes people say they want to look forward to, but they really don't want to look forward to. So just the psychology around retirement, and making that change in lifestyle, and making that change in business mindset, keeps people procrastinating, for lack of a better term.
Yep. Another factor, which I don't think people have fully thought about yet, or considered, or even heard of, is that we all know that baby boomers are retiring, and that many of these small businesses that they own, they're going to be keen on selling it, right? So a lot of potential exits going to occur on the business ownership side. What I haven't heard so much about is who are going to buy these businesses. And just from looking at the number of Generation X people compared to the number of baby boomers who are retiring, it doesn't seem like there's going to be enough buyers out there for all these businesses. So you might see valuations get compressed, and what business owners should be thinking about doing is making their business, as attractive as possible to potential buyers, to offset this natural valuation multiple compression that's going to occur just from having too many businesses out there and not enough buyers to gobble them up. What are your thoughts on that that situation?
Well, there certainly is a disconnect or a difference in the demographics, and you're absolutely right. There's a lot of baby boomers that are getting into that, again, that retirement mindset, where they want to retire, they want to sell their business as part of that. And certainly they're called baby boomers because there's a significant demographic there. But younger generations are statistically also becoming more entrepreneurial. I am always pleasantly surprised by the number of young people that I meet. And young people, by the way, I start at 18 and maybe even all the way up to 40. Okay. So I take a very broad view of young people. but they're all very entrepreneurial. They want to do their own thing, not necessarily, buy a business. That's sometimes it, but to be on their own, to have their own professional practice, to be an entrepreneur, to do something other than work professionally for a big corporation. So I think that's one of the mechanisms that could help kind of square away supply and demand. Is yes, you have the baby boomers, which just in terms of count are big, but then you have the younger generations that in terms of mix are more interested in these types of business opportunities.
Right. And have you crunched the numbers, and does it look like they're in balance, or does it look like the baby boomer business owners today really need to get their house as a in order, as attractive as possible, because it's going to be increasingly difficult to get the price they want? I mean, is that a premise, a hypothesis that's more true than not, or just just something that people don't need to concern themselves so much about?
Well, you have to get your house in order, so to speak, and make your business as valuable as possible, because to be honest with you, even independent of the demographics, right? Buyers are going to try correctly to look at as many business opportunities as possible. Okay. They also feel that they have more of the time benefit than the seller. Because again, the seller may be more interested, motivated, working with a more compressed timeline because they're looking at retirement. Maybe they have some health issues. Whereas the buyer, they feel that they have the control because they have the money. A lot of times, if they have a nice job, they're already earning income. Maybe they're happy with their current situation, but looking for something better. So for them, if finding a business is a 1, 2, 3 year process, they don't have a problem doing that because, again, they've got a job, they've got income, they're happy with it. And they're going to try to explore as many opportunities as possible. So simply because of that, you as a seller want to make sure your business is as valuable, as easy to sell, and as attractive to a potential buyer, independent of a mismatch in demographics.
Right. Got it. So for the business owners out there who'd like to hear more about how you can help them with preparing their business, perhaps to sell, and or selling the business, what's the best way for them to contact you?
Well, very easy. One is you can just call me right on my personal cell phone. It's area code 484-358-9470. Again, 484-358-9470. Or you can email me, Sal, SAL459 at yahoo.com. Again, Sal, SAL459 at yahoo.com.
All right. Sal, it's been fantastic having you on my show. Really enjoy our conversation about selling businesses.
Absolutely. Thank you for having me. And I hope, again, this helps get the word out, educate people a little bit, and again, most importantly, motivate them to start early.
Yeah, earlier is better. Sal, have a great rest of your week and talk again soon.
Thank you, Malcolm.
All right. See ya.